Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, June 19th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we're still sitting in a multi-week trading range that basically spans from the previous month's close into about 24.43 half. And so the previous month's close sitting here at 24.14s. We got up to about 24.44, so we have about a 30 handle range here where prices have been bid off the lower edge of the range, offered off the upper edge of the range, but we've still been in a nice bullish trending market. So typically speaking, you're looking to fade the edges at the extremes with an upward bias. And so if price were to drop down into the previous month's close, again, this would be an area for bulls to look to trap for a shot at pushing this thing higher. If there's any break to the downside outside of this range, it could be a quick move, something like what we've seen before, where it drives the stops down, finds support, and then all of a sudden we're snapping back toward new highs. So right now, very difficult to judge how this is going to play out to begin the week, but overall, the bias remains to the upside. Pullbacks into this area offer an opportunity for swing buys for a continuation to new highs, and look to fade the edges until proven otherwise. So let's take a look at the intraday time frame for a moment. On an intraday basis right now, what you'll notice here is that VWAP is currently trending higher, pullbacks are currently bid, and price is holding currently above the June 14th FOMC level of 24.36 quarter. Any failure to hold this level could rotate this thing downward, and again, we'd be looking for support much lower. But for right now, this thing is currently trending up. Bulls are defending value at the moment, and 24.36 quarter is going to be very, very important short term. Here's the previous session's close coming into this zone again near S3. Could be an opportunity for a short-term trap for bulls. All right, let's take a look at crude oil. Here's crude currently testing the 45.20s, which is very, very important. If we look at the daily time frame here, something you'll notice here is that price is pushed down toward the recent support here. We have support at 43.75. We talked before that basically any rejection up here could likely lead to a move down into 43.75 and 44.32. Same thing with this rejection here, that we could be looking at more weakness. We've seen those plays develop over the last couple of weeks. Now we're seeing price test this 45.20 here. And again, in a downtrending market, prices are testing above recent highs here. The market's testing these prices above these recent highs. And if there's any failure to see acceptance above 45.20, again, we could be looking at a move down toward 43.75 for a test of this edge. Once price can reestablish itself back above 45.20, we could be looking at a return back toward 48.75. So right now, 45.20 is the key level to watch on an intraday and swing basis. So if we take a look at the intraday chart here, you'll notice how price has been playing around this 45.20. We got above it, failed. Came back, tried to make it support and push to a new high, but failed. And now bears are trying to keep it resistance again. So this is going to be an important level to watch here. During the day, VWAP currently sloping up with this LVN, so any pullback to this zone, 44.96, could be an opportunity for bulls to try again at prices above 45.20. All right, let's take a look here at gold futures. Actually, you know what? Let's do ZB. ZB here is right at a key inflection point in the higher time frame chart. Here it is. We've talked about this before, how prices pushing through recent highs here, attempting to see a breakout through the LVN at 155s and into the 160, perhaps 163, maybe even farther if this thing really gets some juice. But this is the midpoint we've been watching here. And I mentioned price could stay here for a couple of days and we could see a continuation. But if there's any failure to hold this midpoint right there, we could be looking at a significant failure, breakout to the upside, a failure of that, and that could lead to another rotation back down. So right now, the intraday level and swing level to watch is that mid. The mid is 155.01. That's going to continue to be the key level. Holding above that zone offers an opportunity for this thing to stretch higher But remember, the market has not been able to see acceptance above 155s in quite a while. So this is a long shot here, but if for this thing to go higher. But if there's any failure to hold 155s, this could be a failed breakout that leads to a reversal back toward 151s, maybe even back toward 149.24s, which is CVPOC. I also wanted to take a look at RB. RB gas futures here, what you're seeing is price pushed back above the 145s and also above the June 14th FOMC level of 143.49. We've seen lower highs here with lower lows, but every time we get down into the 145s, it's an opportunity for bulls to come in and defend over recent history here. You can see 145 has been very, very important ever since last December. So right now, the price is pushing back above 145. So that's going to be the key level here. You got 143.49, 145s here, very important on a swing basis, because if bulls can keep those areas bid, the next push could be back to value at 154.26. That's composite value. So right now, the opportunity is, if any pullback occurs into 143.49, that could be an opportunity for bulls to defend for a shot at a swing rally into 154.26. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck and trade well.